Welcome to this week's live ASX strategy session. Well, actually, not live this week. I've got an important engagement at one of the kids' schools today, so I'm actually pre-recording this. This is 7:30 a.m. on Friday morning. So I still wanted to get an update to you because there's lots of interesting things going on with the ASX 200, the US markets, and of course also in the commodities. So we're going to go through all of that in just a moment. Everything today, general commentary only, doesn't take your personal situation into account. Having been through that, let's get straight into this week's charts. And we're going to start with the ASX 200. And what we have here, the index is moving towards the end of the week with a new all-time high. I'll come back to this in a moment and talk about what's going on or what's developing in this underlying trend in just a sec. And then over in the US, the S&P 500, it's been pulling back from a record high this week. And I want to look at whether this is a warning of a larger consolidation. So I'll talk about that shortly. But first things first, let's get into this latest price action in the ASX 200. So prices have extended their gains from last week, hit a new all-time high on Thursday. So that brings the gains for the month to nearly 5%, and that's since the April low. So nearly 5% gain during the last 3 or so weeks. So that's a very strong week, and also caps off an extraordinary run from the April low, where there's been a 25% gain, which really is exceptional. As we've been discussing for several months, the path of least resistance remains to the upside. And you can see that in the price action. And we talk about this so often. All these dips along the way, they've quickly been bought. They've been short dips, quick, shallow, and short-lived. And this trend has continued higher. So from that perspective, I think the sensitivity remains to the upside. Money continues to be looking for its way into this market. That's not to say there won't be a larger pullback. That's inevitable at some point. At some point there will be that bigger pullback. But for now, I think it's a case of going with the trend. Go with what's working. What's working is the upside. That's been the case for several months now. And I think that remains a play until we have good reason to do otherwise. Prices are elevated above their 50-day moving average. I've got the 50-day and the 100-day moving averages on the screen. So you can see prices are pulled away from the 50-day moving average, but they aren't at an extreme. They're not like radically above the 50-day moving average. As we saw during May and June, so during this period on the chart, prices were also elevated, and that condition persisted for a while. So this where prices are now, they're not an extreme above the averages, so that still opens the potential for further gains from here. I think that the timing of a pullback is always uncertain. Prices could pause near current levels and allow these moving averages to catch up, or the trend could extend. I don't think we should get hung up trying to pinpoint every turn and every week. Is it an up week? Is it going to be a down week? I think that's a hard way to make money. I'd rather focus my attention on the underlying structure and then position my portfolio according to that. And the structure that we have here, it's a bullish structure. We have moving averages which continue to rise. Prices are above the moving averages. Yes, there'll be pullbacks along the way, as we've already had, but they've all been short and shallow, as we've discussed. But my aim is to be positioned with the trend, not trying to trade around it. So I don't want to be predicting pullbacks and selling and then buying back in. That's a very difficult way to play it. I think the money's made by staying on these broader trends, being positioned with the broader trend. Having a look at the ASX 200 equal weight. And when we do that, here's the ASX 200 equal weight. It's also made a new all-time high on Thursday, and that follows the briefest of pullbacks through the week. Barely even counts as a pullback. It was just 2 or 3 days. I think what we have, this indicates that I think this week's gains indicate that this remains a broad-based rally, and we can see this playing out also in the small ordinaries and the emerging companies, which I'll show you those in a moment. We talked about the potential for a pause in the equal weight last week. I still think it's likely. Like I wouldn't call what we've really had there in the last couple of days much of a pause. I'm talking about more the potential of more of a multi-week pause. I think that still that always remains a possibility, and need to remember this has been an exceptional rally off that August low. The market's put on something like 5.8% in just 3 weeks. So don't be surprised when we do get that larger consolidation. And remember, when consolidations do occur, they're often a positive for the market as they help make trends sustainable. And I think the underlying message to take from what we have here in the equal weight is that this rally is built on broad participation, which is often a sign of a strong market. Coming back to the ASX 200, just briefly, as I've been telling you in over the last few months, I'm long the ASX 200 index. I'm long individual stocks. I'm happy to stay that way with prices above these rising moving averages. I think the way I think this works is that pullbacks should be viewed as potential buying opportunities. That's been the case in these two most recent pullbacks. They've proved to be buying opportunities. I think that remains the situation that we're currently in. And of course, wide trailing stops. I'm using those wide trailing stops to see off these pullbacks when they occur and try and stay on this trend for as long as possible until conditions do invariably change. Now, we're going to the US market now. If you're getting some value, please hit that like button, leave a short comment. Tells YouTube you're watching. YouTube shows other people, and that helps me heaps. So please do that. Click that like button now whilst you're thinking about it. Okay, so let's go over to the S&P 500. And well, it's been a week without a new all-time high. And all-time highs are something we're become quite accustomed to in recent months. There's been 19 of them so far this year. Most of them have been since around June, but not this week. Prices have pulled back and are consolidating below the latest record high. At this stage, I'm viewing this as a routine pause within a bullish trend. Nothing here stands out to me as being a warning of an impending trend change. Just looking at the underlying structure, the key factors I'm focused on are the rising moving averages and price being above those moving averages. It's such an important structure to understand. When you look at a chart, take your eye straight to where are the moving averages, where is price relative to those averages. That's your first indication of what the underlying structure of the market is. And these are bullish markers when you have that condition. There's also that clear sequence of rising lows and rising highs, again, a bullish marker. It's normal for people to worry when prices are hitting these historic highs, but when we look at the history of all-time highs, they tend to lead to further gains, not lasting tops. Of course, at some point, a record high is the top, but more often than not, they tend to lead to more all-time highs. That's what makes a trend. Prices move higher. And when we consider the factors I just went through, and that being the rising moving averages, price above the moving averages, I think the odds favour new highs later in the year. The potential for more consolidation, I think, is very much there at the moment. It's been a big rally with only short pauses. And we're on the doorstep of that seasonally weak September. You look at how far the market's rallied. Heading into September, September is notoriously one of the weakest months of the year. It's one of the trickiest months of the year, which often does lead to pullbacks. I don't like to trade by the calendar, but given it's been such a strong advance, there is some pullback from a high at the moment. Be open to that possibility that there is more more consolidation. But as I said with the ASX 200, it's the underlying trend that determines my positioning. And as it stands, this trend remains upwards. So I want to remain on the trend, not try and trade around a possible extension of a consolidation. Having a look at the equal weight, S&P 500 equal weight. And this has been a constructive week. What we've seen here with the equal weight, S&P 500 equal weight, I think it's encouraging that this has held onto its recent gains during the pullback in the S&P 500. So you can see this nice rally off the 50-day moving average, and we had this sideways consolidation. Whilst the S&P 500 has been pulling back in the last few days, the equal weight has remained firm. And you can also see it's been a shallow pullback. So that's a sign that most of the market is holding onto its gains, not losing much ground. I think that's encouraging. Prices are consolidating just below the July high, and they're also within striking distance of the November 2024 all-time high. As always, there are lots of ways that this could play out. The price action could play out over the next few weeks. But if we were to see a few weeks of consolidation, just maybe some sideways consolidation above the moving averages, that would potentially firm up a strong platform, platform above the moving averages. Say we've got this chop above the moving averages, you potentially get that strong platform that could then support a push to new all-time highs. Maybe that could be around October, November. Just speculating on the time, I don't know. But if it played into that September consolidation, maybe it could be the breakthrough in October, November. Just things to keep in mind. We don't have a roadmap for this, but we do have an underlying trend, and it's just thinking, how could this trend consolidate and then continue to rally? And that's one possibility. Coming back to the S&P 500, I think the play here is straightforward. It's staying long stocks. My base case is that the trend remains up, and that this current pullback is a consolidation before higher levels, whether it takes a few days or a few weeks to consolidate. I think that path of least resistance, it remains up until we have evidence to the contrary. Okay, so I'm going to jump over to the small caps next. We're going to cover the US small caps, the Aussie small caps, gold, copper, uranium, oil, plenty of commodities to go through and talk about as well. But that wraps up the free section. If you're not a strategy session member, there's a link below. Click that. Come on in. Doesn't cost you very much. And we're going to go through so many more interesting things. And then when we go back to live sessions next week, you'll be able to ask about your own stocks. And sorry, we can't do that this week, but yeah, unfortunately, I can't do that unless we're going live. Okay, so let's jump over. Let's jump over and start with the US small caps.